Toncoin, TON, resumes growth amid a flurry of positive news. According to SoSoValue, on May 1st, spot Bitcoin ETFs experienced the largest single-day outflow since their approval, totaling $563.8 million. BlackRock's IBIT recorded its first negative movement at $36.93 million, with Fidelity's FBTC seeing withdrawals of $191.1 million, surpassing the outflow from Grayscale's GBTC at $167.3 million. The total inflow into spot Bitcoin ETFs since their inception dropped to $11.2 billion. By the end of April, this figure had decreased by $343.5 million. Bloomberg noted the formation of price discounts on IBIT and FBTC relative to their net asset value, NAV. Following the current lull in the spot Bitcoin ETF segment, a new wave of investors, including pension, target date, and sovereign wealth funds, is expected to enter the ETF market, according to BlackRock. At present, some registered investment advisors, RIA, are already offering BlackRock's IBIT fund to clients on a recommendatory basis. The next step is to expand the product to major consulting firms like Morgan Stanley. The total value of Bitcoins held in wallets of various states, public and private companies is estimated at $175 billion, which constitutes about 15% of BTC's total market capitalization, as calculated by Van Eck. Interest in digital gold among institutional investors is growing, as hedge funds and investment companies increasingly recognize its potential for capital preservation, Van Eck's report highlights. JP Morgan maintains a cautious stance on cryptocurrencies in the short term, citing the lack of drivers and decreased retail investor interest. Risk factors also include elevated positioning, a high BTC price relative to its estimated mining cost, and a low level of startup financing. Traders dealing in Bitcoin options are preparing for a summer lull in the market, notes Bitfinex. Summer is typically a period of low volatility in the crypto market. Conversely, Cubed Exchange points to the possibility of increased price fluctuations during the summer due to low liquidity. In the U.S., a bill has been introduced to regulate the taxation of income from cryptocurrency staking. According to the proposed rules, staking rewards should only be taxed at the time of their sale to prevent double payments. MicroStrategy plans to launch a decentralized identification protocol, MicroStrategy Orange, based on Bitcoin. Together with MicroStrategy, we could move closer to the idea of decentralized identification using BTC, said the company's founder Michael Saylor. Elliptic has developed an AI-based system capable of effectively detecting money laundering through Bitcoin transactions. Utilizing external data, the system can identify laundering schemes that are inaccessible to traditional analysis methods. Toncoin, TON, has resumed its upward trend following a correction, spurred by investments from venture firm Pantera Capital, which manages assets over $5 billion. We believe TON can bring crypto to the masses, as it is widely used in the Telegram ecosystem, noted Pantera. On May 2nd, TON developers announced the integration of the platform with the on-chain analytics service Arkham Intelligence. On May 1st, integration with the cross-chain platform LayerSwap was implemented, which, according to its representative, will allow sending USDC from any network and receiving USDT on the TON blockchain. Solana Bitcoin cross-chain bridge scheduled for launch in Q3 2024. Zeus Network plans to launch its Solana Bitcoin cross-chain bridge, Zeus, ZPL, connecting two major ecosystems by the third quarter of 2024. These ZPL assets open up a world of possibilities on Solana, wrote the Zeus Network team on May 1st. They will facilitate activities such as DeFi, GameFi, SocialFi, DePIN, and others that were previously challenging on the Bitcoin blockchain. ZPL is a suite of programs for the Solana Virtual Machine, SVM, enabling developers to integrate Solana's built-in support into decentralized applications and execute multi-chain transactions. ZPL assets can be fungible, cryptocurrencies, or non-fungible, NFTs, representing a wide range of digital assets, commented Zeus Network. With a market capitalization of approximately $1.2 trillion and more than 11,000 runes generating over $135 million in fees in the first week on the Bitcoin blockchain, the potential for value transfer is immense. Through the ZPL and Apollo Bridge protocol, users can deposit their Bitcoins and receive ZPL-wrapped ZBTC tokens, which can then be used to interact with decentralized exchanges, NFT marketplaces, lending platforms, gaming, and SocialFi within the Solana (SOL) ecosystem. Developers plan to continue expanding the range of Solana assets supported by ZPL to include Bitcoin runes and ordinals, provisionally named ZRuneX and ZORDX, respectively. Other milestones on the Q3 roadmap include enabling Bitcoin staking on the Apollo network. Zeus Network is backed by Solana co-founder Anatoly Yakovenko and STAX co-founder Munib Ali. On April 8, the protocol secured a funding round of $8 million at a valuation of $100 million. Launched in April alongside the Bitcoin halving, the Bitcoin Runes protocol offers Bitcoin users a new token standard that enhances blockchain functionality, allowing for the tokenization of various real-world assets such as real estate, stocks, commodities, or even other cryptocurrencies like stablecoins. Meanwhile, Bitcoin Ordinals is a numbering system that assigns a unique number to each Satoshi, or 1/100 millionth of a Bitcoin, enabling tracking of transfers and the issuance of unique assets on the Bitcoin blockchain. The Bitcoin decentralized application ecosystem is experiencing a resurgence with the invention of new protocols. Last month, Orders Exchange completed integration with the Bitcoin Runes protocol to facilitate the issuance of fungible tokens on its own network and constructed a bridge of Bitcoin assets with Microvision Chain, which enables the exchange of BRC-20 tokens. Anchor expands liquid Bitcoin tokens on AI blockchain Talus. Decentralized blockchain infrastructure provider Anchor is set to introduce liquid Bitcoin, BTC, tokens for the AI-focused blockchain, Talus, starting May 1st. Bitcoin is not only the oldest blockchain, but it also remains the most liquid, Anchor stated. Traditionally, this liquidity has been locked in Bitcoin L1. Through Anchor's liquid staking service, Bitcoin can be redeployed in staking through various Bitcoin res-staking protocols, allowing Bitcoin network users to earn additional staking rewards while providing other ecosystems access to Bitcoin liquidity. To participate in decentralized Bitcoin finance, DeFi, users first delegate their BTC to a res-staking protocol operator, which Anchor then uses as collateral to create BTC liquid staking tokens, LST. In the case of Talus, Bitcoin LST can be used to power blockchain smart agents or artificial intelligence assistants and their applications, such as booking travel, making online purchases, and managing portfolios. Talus's smart agents are also capable of combining multi-layer atomic swaps and executing them in a single transaction to ensure security, for instance, to protect against flash loan attacks. Anchor's liquid BTC staking unlocks a massive volume of liquidity, ensuring that Talus smart agents can seamlessly perform simultaneous DeFi transactions, such as atomic swaps, commented Talus. This initiative follows Anchor's introduction of its first product for liquid Bitcoin staking in March, in conjunction with the Babylon protocol. The project allows users to safely earn income from their idle Bitcoins by providing them as collateral for issuing LST, which can be used to validate transactions in proof-of-stake blockchains. The income generated from LST staking is then redirected back into the user's locked Bitcoins. Currently, the Babylon protocol is in the network testing phase, with the mainnet launch scheduled for the end of this year. Despite ongoing market corrections, the Bitcoin DeFi ecosystem has thrived over the past year due to the invention of new protocols such as Ordinals, Inscriptions, Atoms, and Runes. One such project, the Omnichain Income Generation Protocol SolveBTC, has accumulated a total locked value, TVL, of $700 million from its yield-bearing Bitcoin minted on Arbitrum, Merlin, and BNB Smart Chain. SolveBTC reported that the protocol has staked 10,000 BTC and attracted over 92,000 participants shortly after its launch earlier this month.